All right, welcome back. So, if you're a beginner business owner, I guarantee you've heard the terms DBA and sole proprietorship tossed around like confetti. But what do they actually mean? And more importantly, how do they impact your brand new venture? Well, today we are breaking it all down in this explainer so you can start off on the exact right foot. Let's get right into it. Just a super quick reminder, you are tuning into Business Basics Hub. This is your go-to spot for clear, absolutely no fluff business guidance. We are all about taking those complex, kind of intimidating topics and making them incredibly simple and actionable for you.
And before we dive in, here is our standard quick disclaimer. This explainer is strictly for general educational purposes. It's not legal, tax, or financial advice. Always consult a pro for your specific situation. Okay, let's go. So here's our roadmap for today's explainer. First, what are they? Second, why this matters. Third, how to set them up. And finally, common beginner mistakes.
All right, section 1. What are they? Let's tackle the most basic question here. What exactly are these two things?
Okay, so a sole proprietorship. This is the absolute simplest business structure in the US. Honestly, it's the default. If you're an individual and you just start doing business for profit, like maybe you're selling a service or a product, guess what? You are automatically a sole proprietor. There's literally zero paperwork to file to make this happen. It's just default from day one. Think about freelancers, independent contractors, or anyone getting paid on a 1099 tax form. They're almost always sole proprietors. Now, the huge upside here is complete control. You get to keep 100% of the profits. But, as we'll see in a minute, you are also on the hook for 100% of the liabilities because you and the business are legally the exact same person. Now, on the flip side, we have the DBA, which stands for Doing Business As. This is completely different. It's not a business structure at all. Honestly, it's really just a government-issued permission slip that lets you use a trade name or an alias out in the real world. A DBA is actually a consumer protection thing. The law basically says that if you operate under a catchy brand name, the public has a right to know who's actually behind the curtain, right? So you file a DBA to link your public-facing business name right back to you, the legal owner. Depending on your state, they might call it a fictitious business name, a trade name, or an assumed name. But the reality is the same across the board. It absolutely does not create a new company. Okay, I love this analogy. Think of your sole proprietorship as the actual vehicle you drive. It's the underlying legal structure. The DBA? That's simply the license plate attached to the bumper. It's what you call the vehicle, but it doesn't change the car itself one bit. You can totally drive your car without a custom plate, just using your own personal legal name. But if you want that awesome brand name on your storefront or your website, you've got to register that DBA license plate. Moving right along to section 2, why this matters. Let's talk about the reality of risk and liability, because the stakes here are very high. We need to debunk the absolute biggest myth out there right now. A DBA does not protect you, period. It doesn't create a legal entity, it gives you zero personal asset protection, it changes absolutely nothing about your taxes, and no, it doesn't give you exclusive trademark rights to a name. If you want exclusive nationwide rights, you need a federal trademark from the USPTO, not just a local DBA. And as far as taxes go, the IRS doesn't care about your DBA. It's totally invisible to them. They only care about your underlying structure. So here's where things get real. Because you're a sole proprietor, you have unlimited personal liability. Remember, you and the business are legally identical. Let's paint a picture based on our sources. Let's say your business owes $200,000 to a vendor, right? But the business bank account only has 20 grand in it. Well, you are personally on the hook for that remaining $180,000. If someone slips and falls in your workspace or a client sues you over a contract, your personal home, your car, your life savings, they are entirely at risk. And filing a DBA does absolutely nothing to stop that. When you look at it side by side, it's crystal clear. Your sole proprietorship is your structure. It costs $0 to start, and taxes just pass through to your personal return on a Schedule C. Plus, you pay self-employment tax. Your DBA? That's just the name. It might cost you $10 to $100 to register, but it changes absolutely nothing about your taxes or your personal liability. If you want a brand name for your bank account, you get a DBA. But under the hood, your structure is still just a sole proprietorship. All right, section 3, how to set them up. Let's look at your clear step-by-step roadmap. We've broken this down into 2 simple phases. Here are the first 4 steps in phase 1. Step 1, just begin earning money. Seriously, the second you do, boom, you're an automatic sole proprietor. Step 2, choose a business name.
If it's anything other than your actual personal legal name, you move to step 3, which is searching your local county and state databases to make sure nobody else is already using that name. And finally, step 4, register your DBA with your local government and pay that small filing fee. Now, quick side note, in some states like California or Florida, you might actually have to publish a notice of your new name in a local newspaper for a few weeks to make it officially complete. Crazy, right? But totally true. Okay, moving into phase 2 to get you fully operational. Step 1 here is to apply for a free EIN, that's an employer identification number at irs.gov. You could use your social security number, but getting an EIN really protects your privacy from clients and vendors. Step 2, grab any necessary local licenses or permits. Step 3, and this one is massive, guys, open a dedicated business bank account using your new DBA certificate and your EIN. Banks pretty much always require the DBA for this. Whatever you do, never mix your personal and business money. And step 4, set aside 25 to 30% of your net income for taxes. Since you don't have an employer withholding taxes for you, you've got to make quarterly estimated payments yourself, usually in April, June, September, and January.
And that brings us to section 4, common beginner mistakes. Let's go over the big pitfalls you need to avoid.
All right, please avoid these traps. First up, and we've hammered this home, is the dangerous assumption that a DBA works like an LLC to protect your personal assets. It absolutely does not. Second mistake, skipping the name search. Don't go printing a bunch of expensive marketing materials only to find out the name is already taken. Third, forgetting to renew your DBA. Most of them actually expire every 1 to 5 years. And fourth, illegally sticking terms like Inc. or LLC onto your DBA name when you're really just a sole proprietor. It's completely misleading and it's strictly prohibited in every single state. Oh, and remember, a DBA filed in one state does not magically cover you in another. I honestly love this quote from our source material because it just hits the nail on the head. A DBA gets you a name, an LLC gets you a wall between your business and your personal life. If you take away anything from this explainer today, let it be that. So ask yourself this really critical question. Are you taking on risky clients, working in a physical space with customers, or building up personal assets like a home and a savings account that you desperately need to protect? Because if you're nodding yes right now, a sole proprietorship with a DBA just might not cut it. You might need to look into upgrading to an LLC sooner rather than later to build that solid protective wall around your personal life. Before we wrap this up, just another quick reminder of our outro disclaimer. This content is for general educational purposes only. It's not legal, tax, or financial advice. Laws vary wildly by state and by your individual situation, so please always consider chatting with a qualified professional for guidance specific to your business. And that's a wrap. Thanks so much for hanging out with us for this explainer on Business Basics Hub. If this helped clear things up for you today, do us a huge favor and smash that like button. Share this with a fellow business owner. Subscribe to the channel and hit the notification bell so you never miss our next upload. And before you go, think about this. Is your current setup building a wall to protect your future, or is it just painting a giant target on it? Something to think about. See you in the next one.